The conflict has sent oil prices sharply higher as disruptions to tanker traffic through the Strait of Hormuz create uncertainty about how U.S. and Israeli attacks on Iran could affect global supply. European natural gas futures surged more than 42% following the shutdown of major shipborne gas supplier Qatar Energy. Prime Minister Mark Carney warned that the ongoing conflict is expected to have a direct impact on oil prices.
In the very short term, you get a risk premium. In situations like this, you'll get a risk premium, particularly obviously in energy markets, oil markets. There is military activity around the Straits of Hormuz, which is an obvious choke point. When you go back to commodity markets and inflation, it comes at a time when commodity price inflation has been lower. I mean, oil markets have been soft as a whole, so there'll be some firmness and some spike on that, but I don't view it as, I view the issue as a fundamental issue of geopolitics, of ending state-sponsored terrorism, ending nuclear proliferation in Iran, and of course protecting civilian lives as much as possible.
I'm now joined by Brendan Caldwell, director of Caldwell Securities Limited, to break this down further. Brendan, thank you for the time.
Always good to be here, Theresa, especially in these, what is the ancient Chinese curse, interesting times.
Well, from a financial standpoint, what immediate impact is the Middle East conflict having on global oil and gas markets?
Well, as our prime minister has said, they're having a spike upwards because so much of the oil and gas that powers the world comes from that part of the world. I mean, and the second biggest supplier outside of that part of the world is here in Canada. So would that we were in a position to take to be able to supply the world with even a greater amount of the energy that it needs. But yeah, the price of energy from West Texas Intermediate WTI, which is the main North American oil, to Brent crude, which is the main North Sea oil, to natural gas prices are all spiking higher over the weekend because of all this.
And how are traders and investors reacting to the disruption in tanker traffic through the Strait of Hormuz and the spike in European natural gas futures?
Well, I think it'll have something of an impact on industrialization in Europe and China. I think it will also have an impact on perhaps the outcome even of the Russian-Ukraine war, because Iran and Russia had some significant ties. But in terms of traders, well, Canadian energy stocks are doing quite well today. You'll be hard-pressed to find one that's doing badly. And the same is true right over the world. Now, whether this is a very short-term spike or whether it's a prolonged, drawn-out conflict, and whether the Straits of Hormuz open this month or next year still remains to be seen. Another great proverb is, any fool can start a war, but who knows how it's going to end.
And how would rising energy prices impact the Canadian oil and gas sector?
Positively, generally. I mean, if the thing you sell becomes worth more on the world stage, your price of your stock's going to go up. The thing being is that we still here in Canada, because of our dithering and inability to act as a unified nation, have had a hard time getting our energy to blue water, getting it out beyond North America. Our energy is worth quite a bit more in other parts of the world, particularly now that, because I mean, most countries that produce oil have, well, how do I say it in a more positive way? Canada is the only normal currency on earth. Our dollar, Canadian dollar, is largely correlated to the price of energy. And there aren't very many countries that are both decent and have that principle. I mean, after us probably comes Norway and then Mexico. Then after that, the rabbit hole goes very deep. And some of these rabbit holes, like Venezuela, have got plugged up, and now the Strait of Hormuz. So it would be better for the world if our, relatively speaking, clean Canadian energy got out there rather than what I would term conflict oil.
And what sectors or industries are likely to feel the financial impact first from rising oil prices? And which markets are the most vulnerable, in your opinion?
Well, I think Europe and the Far East are most vulnerable. They're the most dependent on Middle East oil. Canada and the US are largely energy self-sufficient. We could be even more so, as I argued a minute ago. But I think you're going to see industrial sectors that are paying more for energy, taking a bit of a bite in an already highly inflationary environment, what we've seen. But I think in the old world, Europe and Asia are going to see that most of all.
And are we seeing any changes in investor behavior, such as a move towards safe haven assets as a result of these energy market shocks?
Funnily enough, the Canadian market's up today. So, I mean, the biggest military strike in a long time, and the market's responding positively. Generally speaking, political events, of which I would term this, and I would also term even something as big as 9/11, tend to have a very temporary impact on the market. Interest rates are and still will be for the foreseeable future the determining factor. What'll matter more to markets is where interest rates are, and if they go up, that's not going to be good for markets. But at present, they're still quite low.
Well, Brendan, thank you so much for the time. We appreciate it.
Thank you, Theresa.